Ever stared at your QuickBooks payroll reports and felt like something just wasn't adding up? Like a few puzzle pieces are missing, leaving you with a nagging feeling that your numbers might be off? You're definitely not alone. Payroll, while a fundamental part of running any business, can sometimes feel like navigating a financial labyrinth. One tiny error in employee hours, a misclassified deduction, or even an incorrect tax rate can snowball into significant discrepancies, leading to headaches, compliance issues, and even unhappy employees. Think about it. Payroll directly impacts your employees' livelihoods and your business's financial health. Accuracy isn't just a nice-to-have. It's a must-have. Imagine the frustration of an employee receiving an incorrect paycheck, or the potential penalties and interest you could face for inaccurate tax filings. These scenarios highlight why mastering the art of payroll reconciliation in QuickBooks is so crucial. But what exactly is payroll reconciliation? At its core, it's the process of comparing your internal payroll records with external sources, such as bank statements and payroll tax filings, to ensure everything matches up perfectly. It's like a financial detective meticulously reviewing every piece of evidence to ensure the story is consistent and accurate. Why bother with this seemingly tedious process? Well, the benefits are substantial. Regular reconciliation helps you identify and correct errors early. Catching mistakes early prevents them from escalating into bigger problems down the line. Ensure accurate financial reporting. Reliable payroll data is essential for generating accurate financial statements and making informed business decisions. Maintain compliance. Accurate payroll records are vital for meeting federal, state, and local tax obligations. Improve employee trust. Paying employees correctly and on time fosters trust and boosts morale. Detect potential fraud. Reconciliation can help uncover any suspicious activity related to payroll. So, how do we actually go about reconciling payroll in QuickBooks? Let's break it down into a clear, step-by-step process. While the exact steps might vary slightly depending on your specific QuickBooks version and payroll setup, the underlying principles remain the same. Step 1. Gather your documents. Before you dive into QuickBooks, gather all the necessary documents for the pay period you're reconciling. This typically includes payroll reports from QuickBooks. These reports provide a detailed breakdown of wages, taxes, and deductions for each pay period. Key reports include the Payroll Summary Report, Employee Earnings Summary Report, and Payroll Item Detail Report. Bank statements. You'll need the bank statement covering the period in which payroll was processed. Payroll tax filings. This includes forms like Form 941, Employer's Quarterly Federal Tax Return, State Unemployment Tax Filings, and any local tax returns. Payment records. Copies of checks or electronic transfer confirmations can be helpful. Step 2. Review your QuickBooks payroll reports. Now let's delve into QuickBooks. Generate the payroll reports mentioned earlier for the specific pay period you're reconciling. Take the time to carefully review these reports, paying attention to gross wages. Ensure the total gross wages match your expectations based on employee hours and pay rates. Deductions. Verify that all deductions, such as taxes, insurance premiums, and retirement contributions, have been calculated and applied correctly for each employee. Net pay. Double-check that the net pay amounts for each employee are accurate. Payroll taxes. Confirm that the amounts withheld for federal, state, and local taxes are correct. Step 3. Compare QuickBooks to your bank statement. Next, compare the total net pay disbursed as shown in your QuickBooks payroll reports with the corresponding withdrawals on your bank statement. Total net pay. The total amount debited from your bank account for payroll should match the sum of the net pay amounts in your QuickBooks payroll reports. Investigate any discrepancies immediately. It could be a data entry error in QuickBooks or a banking issue. Individual payments. While not always necessary for every reconciliation, you might occasionally want to spot-check individual employee payments on the bank statement against the QuickBooks records to ensure accuracy. Step 4. Reconcile payroll taxes. This is a critical step. You need to ensure that the payroll taxes recorded in QuickBooks match the amounts you've actually paid to the relevant tax agencies. Federal taxes. Form 941 compare the federal income tax withheld, Social Security tax, and Medicare tax reported on your QuickBooks payroll reports with the amounts you've remitted as per your Form 941 filings. Any discrepancies need to be investigated and corrected promptly. State and local taxes. Similarly, reconcile your state unemployment tax, state income tax, and any local taxes withheld and paid with the corresponding amounts in QuickBooks. Step 5. Verify other payroll liabilities. Don't forget about other payroll-related liabilities, such as benefit deductions. If you withhold amounts for health insurance, retirement plans, or other benefits, ensure the amounts deducted in QuickBooks match the amounts paid to the respective providers. Wage garnishments. Verify that any court-ordered wage garnishments have been correctly processed and paid. Step 6. Investigate and resolve discrepancies. If you find any discrepancies during the reconciliation process, don't ignore them. Investigate the root cause of the error and take corrective action immediately. This might involve reviewing employee timesheets. Check for any errors in recorded hours. Verifying pay rates and deduction setups. Ensure all employee information in QuickBooks is accurate. Correcting payroll entries. Make necessary adjustments in QuickBooks to rectify any mistakes. Contacting your bank or tax agencies. If the error lies with an external party, reach out to them for clarification and resolution. With that said, thanks for watching, and until next time.